Hey everybody, morning. Welcome to the show, Morning Monster. My magnificent monsters, welcome back to the show. Grab your caffeine of choice, be it coffee, tea, or the nectar of the gods, monster, because this market got another jolt. And this one wasn't from the Fed, not from, we got a little CPI lightning, but yesterday was a quiet Monday, relatively. Traders sipping on their lattes, algorithms humming along, and then bam, a notification lights up phones around the globe. Not a press secretary, not a formal declaration, but another Truth Social post from our beloved president. In a move of beautiful, chaotic simplicity, he has declared a 25% tariff on any country doing business with Iran. And the best part of all of this, the two magic words that every CEO and portfolio manager just loves to hear and see: effective immediately. As in, starting today. Effective immediately. No details, no grace period, no list of affected goods. It's kind of the foreign policy equivalent of a landlord texting you, hey, 25% rate hike immediately. Because he didn't like your friends that came over. I mean, just pure uncut grade A market chaos potential right here. The liquidity in the market already thinner than a runway model's patience. And getting even thinner, just evaporating. Why? Because when policy is made like a plot twist in a soap opera, nobody wants to hold a position more than 5 minutes, it seems. Now, for the high school civics class portion of our show, what's the story? How is this possible? Officially, this is about putting the squeeze on Tehran. Iran is, well, having a little bit of social discourse, I guess you might say. Widespread protests, a currency in free fall, the biggest challenge to the regime since the 70s. And Trump is openly backing the protesters, warning the current Iranian government to back off. So this tariff, this grand economic gesture, is the equivalent of standing across the street from a house on fire yelling, hey, I'm helping. But here's the punchline, and might be a good one. Who is Iran's biggest customer? Who's been happily doing business with Iran, buying like 80% of their oil, keeping the lights on in Tehran? Why, our biggest, awesomest frenemy, China. So let's be clear. This isn't just a message to Iran. This is a 25% how do you like me now aimed directly at Beijing. Just a few months after we supposedly negotiated a trade truce. It's like making up with your ex and then immediately keying their car. I mean, the art of the deal, everybody. This is the art of the deal, right? Sun Tzu, right? Anyway, it's a little bit unpredictable here. So while the talking heads probably going to be on cable news debating the geopolitics here, we're asking the real questions. Where's the opportunity? How do we make money on this? Where does the smart money flow when the world gets a little bit stupid? What happens when you threaten to choke off supply from a major oil producer in the most volatile region in the planet? Ding, 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 ding. Oil prices potentially go up. Well, we've seen a few bucks tacked on for what Wall Street calls geopolitical risk premium. And that's just a fancy way of saying things might get a little explosive in this region. So your big oil players, XOM, CVX, having a good morning so far. Energy ETFs, looking a little perky. And, all this kind of on the back of Venezuela. So simple story here. Less supply, same demand, higher prices. Don't overthink it. But be careful. This is potentially short-lived. And what happens when a world leader starts talking about very strong options, getting hourly reports on a hostile nation? Well, things might get a little more explosive. The people that make the things that start to go boom start getting more orders, and defense contractors, Lockheed's, Raytheon's, Northrop Grumman's, their stock prices get a little fear-based tailwinds. Tensions rise, defense budgets flow. It's one of the most reliable correlations in the market. Now, for the less obvious plays, maybe the 200 IQ type plays, excuse me. This great reshoring, the theme bringing manufacturing back to North America. Look at industrial companies here. Look at automation, robotics, firms, companies that are helping make American labor more competitive. Look at Mexico, our friendly neighbor who's suddenly looking a lot more attractive as a manufacturing hub. This isn't a one-day trade. This is a multi-year structural shift in how the world does business. And this is another shot of adrenaline. The Shanghai Composite has been on a tear, absolute tear. It's weirdly under-owned by pretty much everybody outside of Beijing. Everybody's been scared to get into China stuff because of their real estate crisis, the regulatory crackdowns that have been going on. But what if this tariff is just a negotiating theater? What if it's a bluff? What if the Supreme Court puts out their decision tomorrow and we find out the ruling on the legality of all these tariffs tomorrow and they strike it down? This whole thing vanishes. If a deal is cut, all that fear unwinds. Buying into Chinese stocks right now, high stakes bet, but the payout could be asymmetric if this chaos turns out to be a little bit of noise. So to recap, the world is a messy place as always. The single thing that seems to matter the most right now is social media posts. We can rewrite the global trade structure in a post. But for the monsters of the market, the more savvy investors, you just got to stay calm. Be reactive, not try to predict everything. Chaos is just another word for opportunity, You've got short-term fear traders in oil and defense. You've got the long-term structural shift in supply chains. And you've got the high-risk, high-reward contrarian bet on China, which might be one of the biggest performers this year. I've kind of said that a few times now. This is not a time to panic. It's a time to start paying attention. The game is afoot. Things are jacking around. Go out there and make some money. Let's talk about some charts and opportunities today. Nice little pop on CPI. Take a look at that here in a moment. Hey, everybody. Good to see you. Craig, Don, Rob, Larry, Terry, Gerald, Rush. Good to see you, sir. Diane, David, Gary, Darren, Bomb, Mad, Piet, Arturo, Scott. Good to see everybody. Rongamer, Kay, John, Ed. Good to see you. Good to see you. So, jumping in the morning here, all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining. I make predictions. Sometimes they come true, but you should be careful when you trade stocks, options, bonds, forex, futures, cryptos, treasuries. Any of those things may or may not make you or lose you money. If you put money in the risk in the market, you might lose it. If you want somebody to tell you what buttons to push, there's people you can hire for that. And in a twist of irony, so great, maybe y'all find this as funny as I do. The office that they're rebuilding underneath me, they put a sign up on the building that says Edward Jones. I can't fathom the irony of life. An Edward Jones financial advisor office in the office below me. They're still working on rebuilding it, but didn't get it open by the 1st, so maybe by the 31st. I don't know. We'll see. But I just think that's an amazing irony that Edward Jones' office right below me. Maybe I should start parking my truck out front with the advertisement on the back for all their clients. Anyway, S&P 500 popping on CPI this morning. Taking a look at the calendar. Refreshing her a little bit here. I don't know what the devil they're banging on downstairs, but if you can hear it, I apologize. CPI here came in low. The core, anyway. The standard came in 0.3 as expected, and the year-over-year came in 2.7 as expected. Hey, 2.7 inflation, right? No big deal. Everything's under control. Everything's under control. New home sales coming out here in about 30 minutes. And we should get that September data that we've been missing. See how that comes in. Thursday, we get the PPI, producer price indexes, core retail sales. I'm more interested in that number right there, core retail sales. And we'll see how that kind of plays out in the market. Now, I'm interested, is the retail sector still climbing, or are we still kind of declining a little bit? We've been kind of flat. Haven't really seen a big boost lately. So I don't really have a prediction on it. I think the data I keep seeing says we're soft, but I don't know if we just have more in line. Usually we get our January print. It's usually pretty, you go back a couple, looks pretty nice except for 2023. So I guess we'll see on that one. No real prediction for the market moving. I'm just interested economic-wise how we're doing. Then on Thursday, we should get some unemployment. And Friday, nothing. Big fat nothing. So we do have earnings hitting, financial earnings starting tomorrow, right? That ramping up finally. Seems like 2 weeks have happened in the market in the last couple of days. And let's see. Jump down to, yeah, we should have, let me grab this image, open in the browser. Yes, that's what I want. Yes, that's what I want. So before the open on Wednesday, should get Wells Fargo, Citibank, Bank of America. We get some Taiwan Semi, Morgan Stanley, Goldman Sachs, BlackRock, First Horizon, Regions. Yeah, First Horizon used to be First Tennessee. So financials kicking it up here, this starting tomorrow pretty much. Delta came out yesterday, JP Morgan yesterday. Let's go see a couple of charts here. So ES, nice pop on the CPI. JPM, we're pretty lofty here on financials. Wouldn't surprise me to see more of a pullback. Goldman Sachs, Bank of America, Wells Fargo, and they're all pretty lofty. Citigroup, all pretty lofty and all have almost the same chart, interestingly enough. And let's see, save that for a second, reload, make sure I get my current list. There we go. So looking at the bounce yesterday, right up, new highs. Here was the high, here was the low. I think we were looking at the 30-minute chart specifically, right to the high, right to the target. Look at that. Same pattern we usually see. Hit the 1448, retrace, then right up to the 1272. I mean, can't make this stuff up. What usually comes next? Typically another retrace, but it also opens the door to push out to the 1618. So we could see this rally on up here for ES. And if you're not familiar with ES, that's S&P 500 futures. Why look at the futures? Because there's no gaps. They trade 23 hours a day, 6 days a week. We get data on this. Whereas your cash index, we had a funky gap in here. Funky gap yesterday. We've brought it back. Didn't bounce off the roadmap line. Did hit that target area, though, that we've had on there. More of a 15-minute bounce from back here. We had that high, we had that low, we hit that target, we retraced, and then we came up and hit the 1272 right there. Now we retraced again. The potential is to either pop to 7,000 or take a spill back down here. That's kind of our potential options here. Just based on price action. You can say like, well, how does that tie into geopolitical whatever? Doesn't matter. Look at the bigger picture here. Didn't do those corrections, so that works. Jump it up to the hourly. Look at this retrace we did right here, starting in October. Jumping down here through November. We have that 1272 right there. So we tagged. We have finally made it up here. We've tagged the target. 1448. Struggled to break out. This activated all the way back over here in November. Took us right here to January to get here. We may see another retrace and a pop up to that, but we're starting to look kind of toppy until we do another one of these. So takes one of these flush outs to really get us going again. At least one of these smaller ones. So look at a little bit toppy. A pullback would be more what I expect. Just kind of what to expect when you're expecting. NASDAQ been pretty choppy in here. Really banging its head on that. Right there. Really banging its head. Right in that zone. Grinding, trying to grind on through. We talked about this yesterday. Tried to grind on through yesterday, rejected. Trying to grind through today. We'll take a look at the GEX map, but this is starting to look like we're pushing on through. And this can open up the door for a bigger pop on up here. Because NASDAQ has been lagging. You know, S&P 500 is the one that's been leading. NASDAQ's been lagging. Russell here, it's going for it. We've talked about this a few days. 2,700, 27, maybe 2,730, 2,740. That's been the target up there. It's been gunning for it. If we did this nice little retrace back in December, set this thing up, nice 3-wave. Coming into the year, we made a bottom and we are set to go touch that 2740 area right up there. Beautiful on Russell. Oil making its way up to the roadmap line, as I kind of thought we might when we started poking above. Now we'll see. Like, do we turn down? Or do we poke on through, back test, and set up the upside? It's possible we made the bottom. I'm just not sure we're done on the downside yet, though. Just doesn't seem complete to the downside. Triple bottoms aren't really like a thing. And that bottom, nice little pop. One more test down here. We just need a nice little flush, clean all this up. Then we can build off of it. gold was pulling back. Now we're back to grinding higher again. And the gold train, you know, don't bet against it until it's done. But eventually this train is going to end, right? Keeps going until it stops, and then it's not the hot trade anymore. Be careful out there. How much higher can it go? Well, you know, a lot of people saying 5,000. 4863 would be my next fib, and then 5,000 above that. So those are reasonable numbers. Like how quick? Not really sure. We can do more of these big fat pullbacks. Volatility is increasing in gold, so I would definitely be careful. Now this big run right back here took a lot of energy. We got about 3 standard deviations away from the roadmap line. We've been hanging in here between 1 and 2 standard deviations, and we're just kind of running in this channel as we get up to, you know, the top of this right in here. We tend to take a little break, so maybe we can hang out in this zone. So you're looking at maybe if we're going to get to 5,000, it could be like April, May, maybe June, if we stay in this kind of channel between the standard deviation lines. If we elevate to a higher level, we could go faster. If we break down into a lower level, could be slower. And this is just a modified version of my roadmap line code right there to add the standard deviations. If you're in a Termite Trading Lab, that code is posted and shared with you. Bitcoin, still sucking it up here. Wish I had better news, but still doing a low consolidation. Like, looks like a bear flag to me. What they call a bear flag. I don't have any statistics on bear flags, but that looks like a bear flag, and the result of a bear flag is typically a breakdown. So be freaking careful here. Roadmap line, upside resistance, and then this 106 area we've talked about for a couple months now. Golly, man. We've been in this consolidation since Thanksgiving, basically. I just keep trading some options on IBIT is what I keep doing, just cash flowing IBIT. It's, you know, if you own Bitcoin itself, it's hard to cash flow it, but if you own something like IBIT, you can cash flow it. You sell calls up here, sell puts down here, and just keep cash flowing. Get some shares. I haven't been called away. I got put shares back here, and just keep cash flowing them all the way across here. Ethereum, lower highs. Got close to testing the roadmap line, but that's the resistance. If you don't have the roadmap line, check out my channel homepage down here. Link underneath me here. Click on that, go to the channel homepage, watch the video that's pinned to the channel. I give you the code for the roadmap line. If you're just like not somebody that wants to code, there's a link in the description for $5. You can pick that up. I tell you how it works in that video, but it's pretty simple. You know, this is a support resistance line. If we're underneath it, we're in a downtrend. If we're above it, we're in an uptrend. We're looking for price to cross above it, back test it, new trend, pullback, continuation on a break above the 618. 75% of the time we get to that 1.1448 fib line, the purple one. And that is 90% of the way to the 1272, 1.272 fib, which is 70% likely. And this is 75%, this is 70%. So if we clean sheeted this baby, got to go way down here to get a clean sheet, I guess. Down, 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 down. So if we clean sheeted this baby, have the roadmap line, something like this. We're looking for price to pop up, retrace, retest. We run our little fib line from here to here. When we get the close above this 618 level, 75% likely we're going to see this move right here. 75% likely, 70% likely. And the crazy thing, how about continuation above that? Drops off to 35% or lower, maybe 30%. So 75% right here, 70% here, and then drops down. What happens? You get a retrace. Now, where's the stop? Always $1 below the low. No matter the ticker, no matter the time frame. And yes, that means like high price stuff. Stuff like Apple has a very small percentage stop, whereas stuff like Sirius XM has a huge stop. So low price stuff is more risky as far as trading this goes, but dollar below the low is always the stop. Hopefully that helps everybody understand the roadmap pattern. Moving on, NKD, continuing the march higher at upside targets. Well, I think we might be on a path to 60,000 now. This should help push U.S. markets higher if we continue on this path. And we did hit the 1272, 1448 of this last little pullback here. And that could open the door for another grind before we can push higher again. Could be short-lived, though. It could be one spike down and then push on out. So looks like we're on that path to 60,000. Should provide more liquidity into risk-on assets. But we're yet to see that actually play out yet. Dollar still grinding on the roadmap line here. If we reject it, we're probably going down for a lower low. If we break through it, back test it, that changes the tone here. So this is a key test right here. If you're short the dollar, this is a key test. If we break above it and back test it, that's a sign you should probably get the fudge out. If we break down below this low we made right here, we're probably going down for a low lower than what we made here in September. Somewhere down in this neighborhood. Around 95. Apple still needs to reach down and hit that roadmap line right there. Could come up shy, but came all this way down. It'd be a shame not to just reach down and touch it. Just a little bit more. Somewhere around that 250 area. Now, if we get below it, that could open the door for going on down to like 200. But right now, I just want to see it reach down, touch that roadmap line, and get another bounce set up here. If we do that, we hold, we turn back higher, get back above the 618, we could be on up near 295 for a target. Amazon, this one's smoking hot. Smoking hot. Look at these numbers down here. This has done the roadmap bounce 24 times on the daily chart for Amazon. 95.8% of the time we've gone on to hit that 127 or 1448. 1.1448. With a profit factor of 36, that's pretty darn smoking hot. That means one time it failed out of 24 trades. So the target is that 265. How could you play it? AMZU, some leverage Amazon. That's a smoking hot bounce right there. Could play with some options, but time, man, look at that. Hit the 337. I've been talking about that for 2 months. Cha-ching. Check that off the list. Next resistance is all the way up here at 385. They're $50 higher. I guess $40, $45 higher. Maybe the next upside right there on Google. Nice. Meta. Oh, baby. Come on. Reach down there and get it. Looking for this to hold this 618 retrace, turn back higher, break through the roadmap line, sets us on a path for 1100 to 1300. The patience waiting for this secondary bounce has been just, we had this bounce down here, the 618 retrace of this whole move up back here last year. 618 retrace, move up, bounced off the roadmap line, holding this 618 retrace, popping back through, getting above these highs, sets us on that path. Could be 27, maybe 28 before we get there. But it opens up the upside for Meta. Microsoft continuing to be soft. If we break down out of here, this opens the door for that bigger retrace, that similar to what Meta did. Golly, excuse me. Could take us down to this 415 area, 420 for Microsoft. Nvidia held this 95 area, 195, and rolling back down. There's your support level right in here around 175. If we get below that, probably going to push on down into this 150 area where we made highs back in December 2024, early 2025. In case you forgot, those highs right there coming into 2025, we might need to go retest those before we can get some more upside cooking on Nvidia. Tesla potentially has the higher low, 618 held so far. Initial move up. Want to get that continuation. We want to see that close above that 468. The market is not counting on it getting above 500 this week. We do have earnings coming up right here in the last week of the month. So this may struggle a little bit before we can get the breakout continuation. Now we may see a little bit of rally into that earnings, pull back on earnings, and then set up the launch. Expecting it to hit 550. Been expecting that since we made the high back last December, and then the low back in Liberation Day. It set this 550 target. This right here can pop us right up in there. Then we'll see what happens. 600 above that. 800 above that. Pretty spicy. Do you already have these trades that you go over that are moving high, or do you wait for them, or you want to before you make your moves? I don't necessarily trade anything. I only have so much money. I'm in TSLL. That's my biggest position right now. So I have a large chunk of money, let's say probably upwards of $300,000 of my family's money into TSLL right now. Maybe a little more. Looking for this breakout. This is my rocket ship pattern here on this leverage ticker for Tesla. We have made this move up. We made this move down. There's that roadmap bounce. And it also lines up with a Fibonacci pattern that I call a measured bounce. That's that 618 right there. I keep talking about these bounces off the 618. See how these two things came together right there and we held? If we get that continuation, usually we outperform on a bounce like this. Could lead to a target up here in the 50s on an outperformance. Now, a move like that on TSLL, talking about 160% higher to get to that 50 area. That right there is pretty spicy, right? Take that back to Tesla, divide that in two. That's an 80% upside. What does that look like? What would that need to be on Tesla to get to that level? Talking about ridiculous numbers. Ridiculous numbers. We're talking about getting up to that 800 level. So I'm not saying that the leverage chart works because I have a button for leverage because leverage is dangerous. So be careful. Doesn't play out all the time. Doesn't always follow my patterns. This could just fail. This could just fizzle out and go down. Suck it up. Netflix right there. Grinding into the abyss. Looking for this to touch the bottom of this box before we confirm the bottom here. Stuff moving today. I go pull gainers. $2 up, more up goes on the gainers list. $2 more down goes on the decliners list. KLAC reaching on up to 272. LHX 393 next upside. HII almost to that target at 437, and then above that we've got 574. AGQ already pushing on through. Dang, man, this thing just keeps rocking and rolling. Next upside here, 437 if we can keep this train going. And this is going straight friggin' up. Straight friggin' up usually gets straight friggin' down. Now, this is 2x leverage on silver, right? Silver poked above 100 on the spot price for the first time ever. A 50% retrace on silver, just going back to 50. When you multiply that by 2 for the ultra, that's 100% downside. 100%. A 50% retrace here on silver. Multiply by 2, get you 100%. This can go from 242 to 0 on a 50% retrace in silver. Be careful if you're chasing this. It wasn't such a big risk at 30. Up here at 242, there's a huge risk that this blows up. Be careful trading these leverage tickers when we get into ridiculous levels. KMT 155, 169. GDXU. So we may be pushing on up to 457. This is another leverage one, 3x leverage here. So if gold miners get a, say, 33% pullback times 3, it's 99% on GDXU. Be careful. THH. Try hard. Not enough candles to do anything with. NOC, nice bounce. Northrop Grumman. That's your defense. Ripping today. 657 upside. Lockheed Martin. Going for the 1618. 568. RVTY. So bigger picture, this has got a date with this consolidation zone up here. Still with lower highs, still a downtrend. Big picture, weekly chart. Be careful. Got to get this thing on up here. Now, if you got tickers that you trade and you want to have me evaluate them, today at 5 p.m. Eastern, I have a 30 minutes of awesome show I do right here on YouTube. Set you a reminder to come hang out. I'll take requests for at least 30 minutes, usually an hour, hour and a half. At 6 o'clock, we'll switch to a members only Ask Me Anything stream. So if you're a channel member, you can ask me anything you want, although I'm not going to tell you how to trade. So, ask me, how do I make money in the market? I'll show you some ways that I make money in the market. I mean, I do consistently make some money in the market. As you can see right here. Do consistently make some money in the market. Right here, my 3-month. Pretty consistent. Up and to the right. The 1 year, up and to the right, getting a little more accelerated. What does that look like? $56,000 this year, last 12 months. And I just started April of 2025. Year to date, up about $4,000 so far. All time, 55. So there you go. Had this account open for a long time. I refunded it April 2025 and started on the mission to build an account that makes $50,000 a month. Now, I'm only at $15,000. 15 is less than 50. So I got a ways to go on this mission. Probably take me a couple more years. 2, 3, maybe 4 years. At least. Maybe still 5 years. I don't know. When I started this, I thought it would take me 5 years to get to the... It's kind of on a 5-year plan. Now, we humans tend to underestimate what we can do in 5 years, so I may get there early. 50K a month is the goal, and I want that reliable, not just one time. That's like need it for the 3-month average. 3 months is going to have to be over 150K. 1 year, going to have to be like 600K. I want to build this into a reliable 50K a month that I can count on. Why? It's just my number. It's a number I came up with. So stay tuned. These are all publicly posted. This is not a trading platform. This is a third-party auditor site, K-Info. All the trades are uploaded here every night. When I close them, this is all closed trades right there. Where's the drawdowns? They're in here. They're in here. See there? There's some drawdowns. None in the last month. Not had a loser day in over a month. Only had one loser day in the last 3 months. There's your loser days in the last year. So, consistency. Keep hanging out. Show you how I do it. So, daily chart on GE Veranova. Probably going to retrace a little bit deeper. Cardinal Health. Looking a little lofty here. I would bet on a retrace, but I'm not going to put any money on it. Oh, there's my meta alert right there. Meta. Dun, 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 dun. Now we need to hold that level. We finally freaking hit it. Need to hold. If we break down below here, it wrecks the pattern. So we need to hold, turn higher. I'm going to set my alert right here. Turn back higher. Microsoft still pushing down. Looks like we're getting some softness on the market today a little bit. Failing to break out here. Big tech. Ormont Technologies. That's been just a sideways chop. There's no trend there. I would be careful. Probably got some resistance at this prior high. AMD. Been looking for this to retrace back down in the 180 area, hit that roadmap line, and turn higher. But if we turn higher now, potential 4-hour bounce. If we could break back above the 240 area, kicks off 280 on the target. Carvana might be marching on up to 518. This is a stock I won't trade it because I just don't think that their business model is a winner, but their stock price certainly proving me wrong. I'm wrong occasionally. Carvana is just one I won't trade. LEU, potential bounce here, 346. If we can get above that, looking for 511. PXX, POSCO Holdings. Is that the... Yeah, steel, POSCO Steel. It's just been sideways for years. Be careful on that one. ALB. Yeah, we're moving on up here. Setting the upside targets. Up here around 600 to 800. Probably gonna... We're basically pushing on up through the 618 there. So sets up the at least 437. Bigger picture. Might have a... might have a date with 1100 almost. PPLT probably going on up to 270 if we get precious metals continuing higher. SanDisk is risky for risking it for the biscuit. So this pattern right here, bubble pattern, when we get into the exponential phase, it's only a matter of time before we get the first initial big pullback. We get a consolidation and then break down below that consolidation. So I just don't ever know where we are on the bubble part. I recognize the bubbles. When we're going straight the frick up, you just never know where the top is. So be careful. This is why when I see them going straight up on the chart, I'm like, be careful. Permacautious. I don't like to lose money. This is where you should be booking profit when your stock is doing this. Booking profit, protecting profit, getting some stop in there, whatever. Because you don't want to ride it all the way back down. Inevitably, that's what usually happens. Matter of time. A lot of people, they miss this top. And then they think, we just need to cool off. And then we break down and you get this anxiety like, man, this correction is taking longer than I expected. We're going to come back, right? It'll go again. This hype was real. And then you end up all the way down here and you actually lost money on something that you were super profitable on. So if you just take profit up here, you'd be a lot better off, or at least protect profit. You know, have your stop in here and respect your stop. Don't just like, oh, I'll just move it down a little bit. I'll just move it down a little bit more. Don't ride them down. Don't turn your winners into losers. So be careful on SanDisk. It's probably going to retrace at some point. Probably going to be pretty vicious. AVAV kicking off the 350 or 457 target, maybe up to 500. BNTX is just chopping in here. Here's one that was a bubble, right? Did that crazy move up, chopped in here, broke down, chopped in here some more, broke down more. You wrote it up here. Just needs to cool off, right? Still needs to cool off before we go higher again. And you're down 75% off the highs. AVAV, yeah, we already covered that. VST, potential for this to break down and go back down to this zone right in here. And be careful there. Does not have a bottom necessarily. We rallied back up to that roadmap line. If we bounce down, come down pretty violently. Now, if we break above, we can set up some more upside here. Got this high, we got that low. Back above 190, sets up 230. Lows. Oh yeah, breaking out. Potentially going up for the 300 target up here from this pullback all the way back here in 24. This low, Liberation Day, breaking above, setting up the target 300, 313. Reddit. We've got the upside target 299. If we fail, could be a bigger correction. Take hold on Reddit. ITA. Yeah, it didn't really do a bounce, but aerospace and defense, ripping hot. TER. Teradyne. 300. DFEN. Yeah, it's continuing to rip out. 101 next upside up there. MVTX. Choppy. I wouldn't touch it. Oklo. If we can get above the 130, 150 area, 223 is the upside. Right there. Now, one I played, Rocket Lab. This is one I played. Right in here. We had the high. We had the low. We started popping. I jumped onto a 70. All the way up here. 70, 80. Call spread. When I jumped on it right down here, cost me $1.98. When we got up here, I closed it for $7. And I jumped out to like February. That's how I play them right there. Rocket Lab was one I've been trading. Rocket Lab was one that made me a bunch of profit back here in the summer. Waited for it to retrace, got on it again. Hit the target. ASTS did the same sort of bounce at the same time, but it hasn't been as enthusiastic and hasn't hit the upside target yet. So why I pick what I pick, can't always explain it. But you got to pick your horse. You got to stay with your horse. You got to trust it. You got to talk good to it. Treat it right. Love the ones you're with. Don't sweat the ones you miss. So a lot to this game. The Coinbase resistance up here at 280. Still has downside if we can't hold on to this here. Laser and Blazer. American Gladiators. Coming up to the what's been the highs. So no reason to believe it's going to keep going higher at this moment. It's just been a sideways chop. That's been the highs for, gosh, darn 7 years. So watch out for the retrace. There's no trend. There's no trend on that. The trend is down. Look, lower lows. Could go down to make another lower low. NXT, that was a 4-hour bounce probably. Yep. There was the high. Here was the low. Getting above that, sets up 117. MP. Daily bounce. Looking for that close back above the 77 area for 108 on the upside. RTX, watch out for the retrace, but defense is ripping, so things can remain irrational way longer than you can stay solvent. So SLV pushing on up. Next upside, 115. Like I've talked about in the past, if silver comes into the historical 15-to-1 ratio with gold, we can see silver at 300 without gold moving. And if gold continues to climb, this adds up too. So the silver to gold ratio in the Earth's crust, 15-to-1. Silver to gold ratio in prices is not that right now. That leaves silver upside potential. But be careful. Big retraces can happen on the way to balance. Bloom Energy, 163 is the target right there. Leverage, leverage, leverage. PALL. This one could be one of the bigger plays of the year if we get the close above the 618 right here. Very quickly, this could pop up in this area. Be pretty much a double. Stuff is declining. Usually we find opportunities here. This is things moving down $2 or more in the pre-market. SNPS. Choppy sideways. MA getting punished here. That one may fail. That was set up for 613, but stop is dollar below the low may fail. AMPA. No roadmap line. Visa, that one may fail too. We'd set up the upside, but not looking too good. PDD. Yes, we're seeing China get punished on the tariff news. Royal Caribbean stuck on the roadmap line. Got that high, we got that low. Rejected the 618, so be careful for another move down. Possible right there. Delta Airlines. Big picture. Had a target on up here. Like 110 for Delta. Yeah, 90 and then 142, 110. I was just kind of going in between there. So 77 and then 90 and then 142. CRH. Watch for the retrace. Charter continues to grind into the dirt. Not looking too good on cable companies. CMCSA. And Comcast looking pretty gnarly too. ARM. And it looks like we're going to go back to the lows from back here in April 25. QCOM. Rejecting the breakout once again. Golly, man. This thing just keeps on having trouble. If we can hold the roadmap line, turn back higher, possible we could get some upside going, but this thing is just grinding in here. Grinding. All right, stuff set up for potential entry today. Roadmap bounces. Here's the high, here's the low. That was the entry kickoff right there. We'll turn on some statistics. This was already in it from back here, this prior bounce. 121 targets. Fair, but not great on the statistics. AGEN, this is a downtrend. I would be careful here. There was the entry, $5, low price stuff. Another low price stuff. This one, basically, the stop dollar below the low is 0, so I would not take that. CWeb. Here's the high, here's the low. This is China internet bulls with 2x leverage. Look for that pop to 65 if you believe it's going to play out. Bling. Bling, 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 bling. Got the high back here. We got the low in here. Kicking off the entry. Looking for 28 on the target. China showing up again here. High, low, entry. Target up here, 42. GCO. Here's your high. Here's your low. Entry, 39 target. That one had... Golly. That one had pretty darn good numbers at 37, 78, 1.5. Pretty good numbers. Statistical significance comes from trades over 30. This running higher than the average at 75, and this running higher than the average at 1.2. So 39 upside right there. GNRC, that's a downtrend. Wouldn't touch it. KFS, that's a downtrend. Probably not going to touch that one either. KOP, that's a downtrend. It did fire off here, but I would be very careful. 3096 would be the upside. It's a net loser on the profit factor. METC, another one that hasn't done the bounce I would expect to see. The algorithm picked the Python algorithm that I used to build the list, picked up that high and this low and that entry for a target right here. I would be looking at that high, this low. STGW. This is in a downtrend, counter trend. You know, the statistics count all of these trades, so it's possible this works out. Dollar below the low is a 25% stop. I would not take that trade. SWX. I want to see all the potentials, so that's why I have the tool find everything, no matter what. Here's the high right there. Here's the low right here, kicking off the entry, and 83.86. That one's a net loser, so I probably wouldn't take it. VNQI. Here's the high, here's the low. Kick off the entry, 49 targets, and a net loser. And yen, along with the yang. This is China. Here's the high, here's the low. I'd probably wait for the close above that 618. It picked up this lower high in here. 60 on the upside. This is 3x leverage though, so if China fails, this is going to fail faster. If it works, it could work big. Leverage stuff doesn't always fall the target. Stop is dollar below low, down around 40. So that's the setups for today. Bias for the day, let's check this out. Let's pull in some GEX, see what we got cooking here. Turning down off the 1448. Wheezing a little bit. Let's see, turn on our night vision goggles. We're sitting at some big levels here. Where's my big level? Down, ooh, wow. 700 million down here at 680. That would be a spill. That's out to Friday. So downward pressure on SPY right now. Do have there's a little bubble sitting above us. Some levels, but SPY looking like we could push down. There's lots of levels in here too. Seeing some 400 million, 100 million, 400 million, 100 million. So we've got kind of this like coin flip a little bit. We could see, this could be telling us that the Supreme Court thing tomorrow might go south on the market. Taking a look at QQQ. Still got the big level sitting at 627. Big level for today down here at 624. And we got some downward pressure on Qs. Let's take a look over here. QQQ. 624. Not far below us. And we might need to go visit the roadmap line again. And taking a look at SPY. 680. All the way down here. Back at the prior low. We might go revisit that. So we got some downward pressure on, using our, what I call the night vision goggles for the markets. See where the options are kind of pricing in what might go right now. And there is a big, almost 400 million level down here at 610 on Qs. 610 would be down here where I've got this alert back at the prior low. So we could see that push on down this week. Be careful. Careful counting long here. Something's cooking in the market. Seeing VIX kind of indicate, and we've been climbing for the last 2 weeks. Been grinding higher. So VIX is kind of indicating, and we've got one of the biggest plays for big trader banks and hedge funds right now is short VIX futures. One of the largest holdings they've had in years on short VIX. That means if and when we get a volatility event, it could have an outsized reaction because of the number of shorts at play. It won't necessarily be a horrible, big, nasty downside, but the volatility could be outsized. So be careful. Be careful, be careful, be careful. Like I said, I'll be back at 5 p.m. Make sure you set your alarm. Come visit me, come hang out. I'll take your requests. I'll be on Market Masters at 11:30 with Jack. Coming up, link is in the description. And